Ladies and gentlemen, welcome back to the channel. Tesla stock today is up over 2%. And let me tell you, we are seeing some crazy bullish option activity today. Before Tesla's delivery numbers, I actually think there's a bit of a mini gamma squeeze happening today. We're going to look at some of the options that are being targeted. Your $800, your $850, $900 calls that are getting some very unusual activity. Now, maybe someone knows something about deliveries. We'll get into my expectations for deliveries here in today's episode, but a more comprehensive guideline, if you will, is coming out at 8 p.m. on this channel at the 8 p.m. video. So stay tuned to the channel for that one. But we have a lot of news to go over, the option activity to go over, which is 98% positive today. Kind of incredible. What the short sellers are doing, update on the government shutdown, all of that as well. The only thing I ask you to do is hit the like button and subscribe to the channel if you have not done so already. It's free 99, helps push these videos out to more people. And yeah, that's better for you and me. Also, if you guys want to come trade with us live in real time, as we are actively hunting in this market for underappreciated AI stocks, a lot of them are small cap companies. Check that link out down below in the description of today's episode. Let's go ahead and get started. First and foremost, today, a bank in the Netherlands, I believe it's ING Dutchland, says we do not offer the proxy voting process or the transmission of a control number. There is no legal obligation to do so for general meetings under foreign law. Elon Musk responds and says, denying shareholders the ability to vote, as you are doing, certainly should be a crime. Franz, in an interview with CNBC, said, quote, we said that the version of the cybercab that was unveiled last year will basically be the one that will hit roads next year, with maybe some minor changes. But Franz says, quote, it's only improvements to make it more efficient and better. Tesla has officially launched the new Model Y Performance in North America, and it qualifies for the $7,500 US federal EV credit, which, I mean, you didn't get long, okay, to be able to order it with the $7,500 federal credit. Starting price, $57,490, excluding incentives. So seems pretty reasonable. 0 to 60 in 3.3 seconds versus 3.5 seconds in the old version. 308 miles of range, 155 miles per hour for the top speed. And there's a bunch of improvements here in this new Model Y Performance. Free paint and interior color option is included for no additional cost for every Model Y Performance order in the US, which is pretty cool. And every Model Y Performance order in the US comes with free lifetime premium connectivity, as well as the tow hitch and any paint and interior color options you want for no additional cost. Is doing some Robotaxi validation testing in Denton, Texas, 45 minutes outside of Dallas, in preparation for future service expansions. There has been a lot of validation testing around Dallas. Dallas could be getting Robotaxi service any moment now. There's a lot of validation going on. Almost every day, there's a new report of a Tesla, of a validation Tesla specifically, spotted in and around the Dallas area. So it's coming. Tesla's Model 3 in South Korea is now sold with a front bumper camera. Tesla's sales rose in France and Denmark in September for the first month this year and continue to grow in Norway and Spain, local industry data showed on Wednesday, with the Model Y coming in as the best-selling model in Denmark. This is actually pretty big news today because we get deliveries tomorrow. So people are like, oh, wow, so deliveries are doing good in Europe now. Like, maybe Tesla comes in with a really good number tomorrow, right? That's the thought process. And Tesla stock rallying before the delivery numbers is a really good sign. Now, we talked about the delivery numbers in the prior episode, and I'll just give you the rundown of my estimates, okay? It's in a nutshell. The base case, the most likely outcome, around 479,350 units. That's a base case assumption. Just on a probability metric, that would be the ballpark of the most probable, okay? Best case, 512,350. It could be a little bit better than this in the best case scenario. The big variable is the US. How much demand did the $7,500 tax credit pull forward? I assumed it pulled forward about 40 to 50,000 deliveries. If that number's more, then there's room to this upside case here, right? Or if the rest of the world was a little bit stronger, I only factored in about 35,000 deliveries in the best case for the rest of the world. Then, if it's 5,000 higher or something than that, you could, make the case for even better numbers than 512,000. But that's a reasonable best case scenario. Worst case scenario, this is where things get good, is about 459,000 deliveries in my view. And that's still better than what Wall Street is projecting. Now, I said in the last video, anything between like 445,000 and 455,000 deliveries is probably a pretty neutral zone for the stock. Like, I don't think the stock would go up necessarily if we were in that range. This, even in the worst case scenario, would be a slight positive, but not like something that's going to skyrocket the stock. Okay, so that's kind of the ballpark. But if I were to go with one, about 480,000 deliveries seems to be most likely. Now, again, Wall Street's pricing in about 430 to 440,000. I think the stock is, again, pricing in as high as 455,000. So anything higher than 455,000 starts to become a positive upside surprise for the stock, in my personal opinion. Now, Tesla has increased the lease pricing for the Model Y and the Model 3 in the US by up to 11%. But Tesla has also introduced a $6,500 lease credit to help offset the loss of the EV credit. They say, quote, monthly lease payments already includes the $6,500 Tesla lease credit, which is subject to change or end at any time. The order does not guarantee eligibility. Now, on Kalshi, you can see that traders on Kalshi are forecasting Tesla to have delivered 510,000 cars in Q3. That is, a really strong expectation. That is not what the stock is actually pricing in, though, right? That's what traders and bettors are pricing in. I'm not. Yeah, like that would not be something I would put a lot of money into a bet on, okay? Now, even Sawyer Merritt here says, optimistic. My estimate is 480,000. Despite the loss of the federal EV credit, I don't think Tesla delivered an all-time high amount of vehicles in Q3, but I hope I'm wrong. So interesting that me and him are pretty much at the same estimate, which I did not know that until I just read this comment here. But again, great minds tend to think alike. Now, Tesla designer Franz also says that the Optimus progress is unbelievable. And he says that Elon is incredibly involved. This is what takes Tesla to the number one applicable real world AI company. Yes, Robotaxi is great. That's going to be awesome. But it's really humanoids that is like the holy grail of AI. Tim Cook back in 2017 said that self-driving cars were the holy grail of AI, and now we know it's robotics. It's produced labor. There's nothing bigger than that. Cheddar Flow on X says Tesla bulls clocking into their daily 9 to 5 of buying calls. So yeah, you could see here quite a bit of call activity. Some of these are longer dated, February 2026. There's a 440 call here for $1.4 million. Here is a June 17th, 2027, $800 call for $3.2 million. Here's a January 21st, 2028, 850 call for 2.7 million. There's a lot of very bullish option activity today, especially again right before Tesla's delivery numbers come out. That's telling you something, one, but two, I don't think it's very surprising. Okay, with the estimates that we're looking at here, I'm not shocked. Look at this. I mean, the June 16th, 2027 options are on fire. Here's a 820 call for 3.4 million, an 810 call for 1.89 million, an 820 call for 1.85 million, a 810 call for 3.46 million, an 820 call for 3.41 million, an 810 call for 3.47 million, an 820 call for 3.41 million. They are betting that Tesla stock is going to do very well, okay? This is unusual option activity, to say the least. If we look at the headline numbers today, you have 376 different trades totaling $806.67 million. So you're already higher than yesterday's number by far. You're like 40, 50% higher than yesterday's number with a positive order value of 98%. Yesterday, there was a positive order value of 93%. People are very bullish for tomorrow's delivery number. And I would even argue that some of this upside we are seeing today in the stock probably is a bit, gamma related. It's probably a bit of a gamma squeeze, okay? And tomorrow, if that delivery number is good, you could see even more of this gamma squeeze activity. Not to mention, short sellers likely start to cover on short positions as well. I think you're a fool at this point if you are short in Tesla heading into tomorrow. Like, that is foolish behavior. Now, short interest of free float, the live estimate at 3.05%. The shares sold short sitting at about 85.57 million. And only about 28,000 shares that are on net today being sold short. You have borrowed shares at 179,500 and return shares at 151,000. So not a whole lot of short activity today on either sides, either covering or shorting. But it wouldn't surprise me into the end of the day if you do see short sellers covering on short positions right before, again, it's the last opportunity to do so before earnings. Like, again, you're a fool if you're short in Tesla at this point. Now, as you also know, today the government is officially shut down. Now, this is not nearly as bad as it sounds. It sounds like, oh my gosh, the government is shut down. That's terrible. But it doesn't change a whole lot. Okay, some national parks might be shut down. Some people might go a little while without pay, but it's not as nearly as bad as it might sound. Now, once the government gets funded, I think that ultimately turns into a really big positive. The biggest negative here is the implication for data, okay? We're not going to get the non-farm payrolls on Friday if the government shut down. That creates a bit of an economic blackout, which, if the data was going to be bad, that's probably a good thing, right? But it does create some uncertainty if you don't get that economic data. Well, the ADP employment change came out this morning. We were expecting between 40 and 50,000 job ads for September. Guess where we came in? Negative 32,000. What? That's insane. That's wild. Last month, we were at positive 54,000. That number was revised to negative 3,000. The ADP employment change is basically the private payroll number, not the government number. So based on this, yeah, there's a problem, okay? Now, you did get ISM manufacturing PMIs today as well, coming out at 49.1. The estimate was 49. Employment came in at 45.3. The estimate was 44. New orders at 48.9. The estimate 51.5. Prices came in at 61.9. The expectation was 63.6. So you did, have a bit of mixed data with ISM manufacturing PMIs, but it's that ADP jobs report today that was really a bit shocking in my view. Now, tomorrow, you're supposed to have initial jobless claims, continuing jobless claims. You're not going to get that if the government is shut down, so keep that in mind. But we will get challenger job cuts tomorrow at 7:30 in the morning, expecting around 150,000. That's almost a double from last month's 86,000. Now, challenger job cuts are planned layoffs. Now, we're heading into the holiday season here pretty soon, so hopefully planned layoffs do not pick up. Like you would hope to see planned hiring from companies, at least from a seasonal perspective, as we again enter into the holidays. So we'll see what happens. Again, a government shutdown historically is not really a negative catalyst for stocks. It actually tends to be a positive catalyst for stocks and to actually drive down 10-year treasuries, okay? Now today, the VIX is actually down 0.1%. Russell is down about 0.2%. NASDAQ break even. S&P up 0.05%. The Dow is up 0.18%. It's kind of a neutral day across the board. It's not like a really bad day. It's not a good day either, which honestly I think is kind of surprising. I would have expected to see the markets down a lot more with the ADP employment report coming in so bad. So I actually think it's like a sign of strength, kind of, that stocks are not like tanking today. Now, in some of your broader market news today as well, the U.S. Supreme Court refused to allow President Donald Trump to immediately oust Fed Reserve Governor Lisa Cook while she sues to keep her job. The order means Cook can remain in her position until the justices hear arguments in the case in January, per Bloomberg. Wells Fargo today has reiterated its S&P 500 2025 year-end target range to 66 to 6,800 from a prior forecast of 63 to 6,500. House Speaker Johnson says nothing we can do to make the stopgap bill better for Dems. Johnson says the House will be returning next week. Now, also in a report from Citibank today, the Fed has seen continuing cuts if data misses. Citi economists say that the Fed will likely deliver 25 basis point rate cuts in October and December as signaled in its dot plot. The shutdown may block key labor and inflation data, forcing investors to rely more on private sources like ADP, which today, we're not good. And especially if the government does stay shut down, you could even make a stronger case for the Fed to cut rates, right? Because if we're shut down and we're not getting BLS data, things could theoretically be collapsing or getting really bad out there, and the Fed would have no idea. It would be a little bit better to fight a weakening labor market than to, worry about inflation at this point with some of the numbers that we are seeing. Now, today, the odds of a rate cut October 29th sit at 94.8%. The odds of a 50 basis point rate cut October 29th at 5.2%. So you are actually seeing the odds of a 50 basis point cut going up. The odds of another cut December 10th at 81.3%. The odds of 3 rate cuts by December 10th at 4.4%. And the odds of only 1 cut by December 10th at 14.3%. So you are solidly pricing in a rate cut for October and December with a growing but still small chance of a 50 basis point rate cut. Now, U.S. House Speaker Johnson says, I'm going to talk to Schumer and Senate Democrats today. And Johnson says he is praying for a very short shutdown. Now, the CNN Fear and Greed Index today is sitting at 52, which is neutral. Market momentum is neutral. Stock price strength is greed. Stock price breadth is fear. Put and call options, greed. Market volatility is neutral. Safe haven demand is greed. And junk bond demand is currently in fear. Now, as we have now entered seasonal strength starting off October, November, December are historically very strong months for stocks, with the CNN Fear and Greed Index only at neutral with the level of bears that we have out there. Again, don't be shocked if you see the markets do quite well over the next 3 months. Sentiment in the AI Investor Sentiment Survey as of the week ending September 24th, so last Thursday, Bullish investors were at 41.7%, neutral investors at 19.1%, and bearish investors at 39.2%. There was a lot of uneasiness about a potential government shutdown, what that would mean for stocks, even though it is historically a bullish event, that you probably did see the sentiment rise for the bears since last Thursday. You probably seen a little bit more hedging and people maybe taking some profits. Like it wouldn't surprise me if we do get kind of an upside surprise move in October, even with a government shutdown. The big risk at this point, especially with the ADP employment report, is we get so much weakness that markets start to get fearful over a recession. In the event that we go through like an actual growth scare, you're flirting with a correction at that point, right? Which is not something we necessarily want to see unless you're a degenerate like myself. Then you would love to see a correction to be able to buy your favorite stocks at lower prices. The average person, though, would not like to see a correction. Typically, people just want to see stocks go straight up and to the right, which to me looks most likely. But the biggest risk at this point is some kind of correction because of a growth scare. And that is something I will be watching. The ADP employment report today does not exactly, quell the nervousness about a potential growth scare. So let me know your thoughts on all of this down below in the comment section. We have a huge video coming out at 8 p.m. on this channel about deliveries, about how Tesla stock might react to it, and much more. So come join us at 8 p.m. In the meantime, hit the like button and subscribe to the channel if you have not done so already. Check out that link down below in the description of today's episode to come join the trading community. With that said, have a great rest of your day, and I will see you in the next one.